Good afternoon, traders, and welcome to the Hot Stocks Outlook for January 19th, 2017. So a very interesting start to the trading year in the equities markets. A lot of really great opportunities, but as always, it's really so important to have the right tools and the right approach so you can make sure that you're really making money regardless of what's going on out there in the markets. If stocks are going up, going down, you really want to be able to take those positions in a way so when all that volatility comes in, you're in the right spot, making money and on the right side of the market here. But I want to be very thorough here as far as how to utilize this software, being the VantagePoint Intermarket analysis software. Now, we're going to go over all the indicators here, but very important to understand, VantagePoint is able to look at other markets. So things like the dollar index, the S&P 500, ETF groups, other related stocks, competing companies, all of these very important markets that affect, influence, and drive the target market that you're trading in and putting your hard-earned capital at risk in. So very important to understand how these other markets can influence the trades that you're in. So against the price data here, we're going to start here with Boston Scientific. We got some new charts as well as some charts we've looked at before to really update you on how this works for traders moving forward. But here we have Boston Scientific here. What we're looking at are the daily bars and candles from Boston Scientific. So you see we're actually starting here at the chart from December 9th going up to the present day, being this is actually a predicted candle generated by the software, but this would be yesterday's price action here. Now, against all that price data though, you see that we have a black line there and also a blue line. But I want to focus on this black line first because it's very important to understand the difference between these two values here. Now, the black line is a simple moving average. Most traders out there are very familiar with a simple moving average. It simply takes the last however many close prices. So you could take the last 10, close prices, you add all those together. And then if you divide by 10, you're going to create that simple moving average. And that line is going to, update based on really what's occurred in the market most recently. So you're going to drop off that 11th day and add in the newest, freshest trading day to create that calculation. Now, the problem with that, when you really think through that and you understand is, all of that information is really just based off of past price. So it's already occurred, completely known by the information, just sort of smoothing out the last however many days of price action. The other problem and the real disadvantage that traders have is that, they're using tools that only look at Boston Scientific. So you're really just summarizing what's already occurred in the past. And so that's why that's really a lagging indicator, really just lags behind and summarizes what the market's already done. Now, also against that price data, though, you see that there is a blue line on the chart. This is very important to understand. Now, that blue line is generated via the VantagePoint software. It's utilizing a type of artificial intelligence called neural networks to analyze how other markets are influencing and affecting this target market that you're trading, in this case, Boston Scientific here. So the value of that line is not simply a simple mathematics of addition and division. It's utilizing very sophisticated algorithms to weigh all of those relationships and then essentially produce a forecast of where future prices are expected to go next. So traders utilizing this tool, really want to pay close attention between these crossovers between the blue line, that predicted moving average, and the black line being that actual moving average. So essentially that summary of what's already occurred. And you can see this PEMA. That's what that blue line, that predicted exponential moving average. Now, what traders need to pay attention to are simply those crossovers, because that's going to alert traders that say, hey, there's been a trend change in this market. If the market is predicted to be higher than that lagging average, well, there's been a shift, and that's a new opportunity for traders. So as long as that blue line remains above the black line, the market is still forecasted to go up. It's still forecasting higher prices in relation to that 10-day average there. So another important thing to pay attention to when using this tool is, really the separation between the blue and the black line. If you have a lot of separation, that's showing a lot of strength. A lot of difference between that prediction of where prices are expected to move and that summary of where we know they've already been. So in Boston Scientific here, you see we've had a tremendous rally to the upside. let's see where we're at right now. I know we're probably going pretty sideways today, but about a 13% move to the upside. So pretty good move here. But I want to go ahead and explain a little bit about this indicator at the bottom as well, because this is what really allows traders of all different types, whether you're a day trader, swing trader, whether you trade options, to really understand, look, what is expected to happen in this market over a given time so that you can adjust your positions and make sure that you're defending those profits, but staying in the market to, in this case, capture this 13% as this market really moves higher. So this neural index here can only be a value of a 1 or a 0. So very straightforward, 1 or 0, yes, no, right or wrong. And what it's doing is it's forecasting 48 hours ahead. So 2 trading days, 2 candlesticks, essentially, 48 hours. So very, very short term strength or weakness in the market. Now, when we pair that with the moving average, we really see the complete forecast of what we're looking at here. Now, whenever traders see that blue line cross above the black line, and they also can see that neural index is saying over the next 48 hours expect strength, well, that's really that double confirmation that says go ahead and get involved in that market. And as long as it stays above that black line, it's still forecasting the prices to move up. But you're going to notice that the neural index, and you'll see this on our other charts moving forward, it can sometimes drop down to a 0. And you see what happens over these time periods. There's a lot of separation still, the market's moving up. Here you see over these couple days of price action, you're going sideways. You are getting that weakness in the market that you want to be prepared for, knowing that, look, trend's still up, but expect some weakness over the next couple of trading days. Once that neural index gets back up to a 1 though, you really want to make sure you're in the market, because like I said, when the volatility really picks up in these trades, you got to have that position on already, because it's going to just gap and go and really start moving, which I'm sure a lot of traders out there understand if you've traded equities for any amount of time here. So let's go ahead, take that information and look at some of these additional charts here. Here we have Chico's, so another retailer here. I think we looked at this last week, but again, crossover to the downside, neural index down at a 0 saying, look to short this market. And you see that blue line has remained below the black line saying, look, go ahead and hold on to that position. It's down about 15%. You see these 48-hour forecasts still very, very bearish with that neural index holding down at a 0, which tells you that, even if you're a day trader or a shorter term trader, you can come in and short over these days knowing, look, the trend is down, the neural index is down at a 0. So especially on days like this with this pop higher, look, the probability is that this market keeps trending lower. And so whether you're short term, whether you're longer term, it's going to guide your decision making based on your approach and your style and what you're comfortable with, which is really the most important thing for traders, to know what to expect and trade in a way that they're comfortable. So here we have about 16% move lower, but let's go ahead and move on, moving with exact same logic that we've had here. Now, we see the crossover with Buffalo Wild Wings here, exact same position. We got a crossover the downside, neural index down at a 0, and it's really informing you, look, maintain that short position. And no doubt about it, there's a lot of separation between this blue and the black line. So you can really rest assured that, look, there's a lot of strength in this move lower. And even when you get these days, with the neural index popping up at a 1, sure, you get some strength over these few days here, but just an extreme amount of separation between those two values. And that's what really alerts traders to understand, hey, what should be my game plan over the next 48 hours of trading? Should I be adding to this position short? Should I be trying to get better prices on my position? Whether you trade, options or anything, you got to know, when does that reversal happen? When will we start see that price movement lower? So, really regardless again of style, you're going to have the right tools to really make sure you're positioned in the right way so that, regardless of what goes on with the greater S&P and things right now, your longs are going to perform well and your shorts will perform well, and you'll really hedge your portfolio that way and be making money consistently. Here we have American Vanguard Corp, a little bit more recent opportunity, but exact same thing. So whether you're long, whether you're short, really doesn't matter. You just have to interpret the forecast here. So blue line below the black line, neural index down at a 0. And again, you see how this works. Little pop up in the neural index saying over the next 48 hours, expect a little bit of strength, but the trend still down. So telling you, look, you want to be, maintaining those short positions as a day trader, keep shorting that market. Market's down about 8, almost 9%. Actually, I think this dropped about 3% more today, but you see just the extreme separation between these two values, and then the neural index as well. Just a ton of weakness over the last 4 trading days saying weakness, 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 weakness. Take advantage of that weakness. Now, last opportunity here I want to take a look at. We've focused on this over the past couple weeks because it's really right at the beginning of the new year, really actually last week of 2016. But we got all these crossovers in a lot of these gold mining and silver mining stocks. And we got that crossover all the way back there. But look at this neural index saying, look, expect some strength in the market. And even last week, we mentioned that, with that neural index down there at a 0, maybe take some profits up at these, high highs there, but try to buy back at a lower price because this trend is still up. You never got that crossover to the downside. And so this is how traders are making, better trading decisions. A lot of guys get wrapped up, so much in the short term of what's going on here and there, and they end up missing the big moves in the market. You see about 25% move higher over 14 trading days. Not a lot of moves out there like that. And you really need the right tools to go ahead and guide your decision making. Make sure you're adjusting those positions over the course of the trade to really, again, put yourself in the best position. So when all this volatility starts hitting the market, you're making money. So as always, guys, thank you all for watching. This has been the Hot Stocks Outlook for January 19th, 2017. Best of luck in the markets. Thank you for watching. Bye for now.